traders from across the globe, and welcome to the 1620th edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This video is being filmed very, very early on Wednesday evening for trading Wednesday night through Thursday because you've seen the carnage that took place in the markets on Wednesday, right? So, quick video, early video, I should say. It's not all that quick. There's a lot of charts. Early video. Let's get you and me and everybody else in tune with what should happen tomorrow. Before we get into what's on the board, you must recognize that futures trading is extremely risky. Consider today's trades. We got in NASDAQ, stopped out. We got in S&P, stopped out. Just like that, stopped. If we didn't use stops, if we didn't have risk management, it would have been a lot costlier than it was to just get a stop hit. So futures trading is extremely risky, absolutely causes substantial financial loss. You must know what you're doing, and you must recognize that even if you put stops in very illiquid markets, those stops sometimes get ran over too, but you got to put them in and stay away from the illiquid markets. That'll help you. All right, so let me show you what's on this board. Traders, don't trade alone. Come hang out with me at livewithoscar.com. Come into my free live trading room. I will help keep you calm when these markets go crazy. One thing I would like to mention about today's performance. The markets absolutely tumbled today. I don't know what it was. They say it was Trump news. I don't really think that's what it is. I think that was the catalyst to get people going. I have a feeling there's a little bit more out there that we haven't heard about yet. And I don't think it's Trump trouble. I think it's trouble elsewhere. But we'll see. That's politics. Who cares? The charts say we likely go down again, at least to start the day off. We likely go down again for trading emini, S&P, and NASDAQ at the start of the trading session on Thursday. What I wanted to mention about today, Wednesday, before we get into this Thursday stuff is this. Today, if you were with me in my trading room, you witnessed what a professional trader does. We got into an S&P trade, we got into a NASDAQ trade because OMNI said it was a good idea to buy at a certain dip when it dipped low enough. We got filled, it did go back up, not enough to take profits, came back down, and eventually stopped us out. Then the markets fell apart. You've seen that today, right? Wednesday, smash down, new low, smash down, new low, smash down, new low. It happened all day, all the way into the close practically. Here is what you would have witnessed if you were in my trading room. We got long, we got stopped, we sidestepped, we were done. We don't chase the market, we don't have an ego, we don't stand there and say, I had to have been right today, everybody, let's buy this again. Oh, stop that a second time. I know I was right, the markets are wrong, let's buy it a third time. You will see that all the time with really crappy traders that have big egos. I looked at it and said, whoa, S&P was wrong, NASDAQ was wrong, in fast order, short order, I obviously did something wrong today. Time to sidestep this, wait for the markets to close, do some analysis, and get back into the markets. And that's how we behaved today. If you were in other trading rooms, I'm sure you had heroes that had to buy it and buy it again and buy it again and buy it again. Why? Because they know they're right. And I don't think that's how this game should be played. When you are wrong, your stop gets hit, right? We have stops in for a reason. When that stop gets hit, you sidestep the market. You recognize you were wrong. You admit you were wrong. And you regroup so that you don't lose all of your account funds. That's how we handle things. That's how you should have handled on that Wednesday drop. And if you didn't, you need to hang out with me in my live trading room so I can teach you the rules. You do not waste money. You do not throw good money after bed. All right, so what is on the board? Starting off with the green OMNI for trading on Thursday. E-mini, S&P, NASDAQ.
That's a red
Thursday.
OMNI, Oscar.
Excuse me?
You said green OMNI. That's a red OMNI.
Did I say green OMNI?
Yep.
I was staring at that when I said that. Well, you know what? Let's back to... All right, traders, what's on the board? All major U.S. indices have filled their gaps. We're starting off with a red OMNI in E-mini, S&P, and NASDAQ. Starting off with the red OMNI, I'm going to show you some reasoning why, yes, it should go down, but I don't know that the end of the world is coming here just yet. We'll see the charts. I'll show you why. All major U.S. indices have filled their gaps except for the NASDAQ. Except for the NASDAQ. And then if you want to go European, the DAX needs to fill its gap too. Now, Wait until you see the chart. There's great reasoning behind what I'm going to show you. The NASDAQ almost has to go fill that gap down below. I will show you why. The euro currency and gold are breaking out. I did show you the euro currency in my last video, and I told you basically this thing's getting ready to go. Well, it went, and it's going further. And OMNI will try to buy it again this evening if we can for trading on Thursday. Then I want to tell you right now, do not fall in love with the downside. Yes, we're going to kiss the downside for a couple of days, right? We're going to put our arm around it. We're even going to hold hands, but just for a little bit of time, and I'll show you why. Number 3 on the board says, let's not call this market dead just yet. Let's not, because we had a down day or two, and there's crazy rumors about our president, and none of them have been true in the past, so why should this one be? Let's not call the top in a market that's been going up since 2009. Let's not call the top just yet, okay? Why don't we be a little sensible about this, and I'll show you some charts. This is what my job is to keep you traders calm, make you recognize what's going on out there, the slightly larger picture, while we trade the small picture, the daily day trades. So with that in mind, again, let me show you some charts now on all the major U.S. indices that have filled the gaps and the one that hasn't, or the two that have not, one U.S., one non. I want to show you the euro chart. I'm going to absolutely show you why we're not calling this thing dead just yet. Traders, with no further ado, let's go look at some charts. Okay, traders, oh my goodness, what a difference one day can make. What do I mean by that? Wonderful bull flag at the top of the bull flag on Tuesday. Then the gap lower opening on Wednesday, and oh my goodness, did it dump. Where did it dump to? Right down to the OMNI average and to the channel line. See the long channel line? And the OMNI average. And the last time it did that, it held. It went straight back up. Will it hold this time? Well, let's take a look at this. So you got the OTAPMO, the OMNI average, and right there you got the trend line. Same thing happened last time. Even we dropped from even higher, and we held and bounced. So you would think I'm going to call a buy right now, right? Oh, let's take a look at a few more charts. Let's pull off the OMNI average. Let's put the 50-bar moving average, something that the rest of the world pays attention to. You opened up through it, broke the average, and filled your gap. The gap was right in here. You opened up, broke the average, and filled the gap in the Dow, and broke. Got under the average, and continued lower, and now it's at its channel line. The emini S&P broke out of its channel, broke down to the 50-bar moving average, where it filled its gap. Interesting, right? Held the 50, held the 50, bounced off it many times, got under it, back above it, made a flag, broke the flag, boom, filled the gap, but got under the 50 and settled under the 50. Is there something building here with the 50-bar moving average and the gap fills? I think there is. Next is your NASDAQ. Now, look how much lower it would have to get to both fill the gap and hit the 50-bar moving average. And that's the theme. If you notice, the 50-bar moving average in each indice comes in at the gap fill. Interesting, right? And we filled the gap in everything but the NASDAQ. Guess what happens tomorrow? That should get filled. That should be the NASDAQ. So, let's continue. Let's see what else we're seeing here. Now you're looking at the Dow Jones Transportation Average. The difference is, most times we fill gaps and then rally back up. Well, this filled the gap a long time ago. Count the days, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 18 days ago. Filled the gap and continued lower. And now look at the drop. This is supposed to be our leader, but these are all dailies. So the leader is basically telling us, even though you fill the gap, you should likely continue to drop further. This is not over yet. Let's move to another chart. We're going to take the Dow Jones Transportation Average again, the leader, and put the 50-bar moving average over it. No respect. Well, look at the amount of respect paid to the 50-bar moving average. What I was going to say is it had no respect for this market at all. It just kept abusing the market every time it got near it. It filled the gap. The 50-bar went through the gap. We filled it a long time ago, and we have been pressing lower ever since. Is the leader telling us that even though we need to get down to the 50 and fill the gap, that we're supposed to go lower afterwards in E-mini, S&P, and NASDAQ? Let's continue looking at our case. The Russell 2000, the other leader, the Dow Jones Transportation Average and the Russell have led this downside move. It filled its gap and continued lower, and broke its 50 and continued lower. You see the theme building here? Let's move along. Here we are with the DAX, just like the NASDAQ. It's got to drop all the way down here to hit the 50 and fill its gap too when it does both. Isn't that interesting that both NASDAQ and DAX, the only two that haven't filled the gap, have to drop to their 50-bar moving average where it will fill the gap. That I had found extremely interesting and wanted to point that out to you in tonight's video before the market started moving around. Let's look at another chart. NASDAQ. Now we're going to take this out. Now I'm going to say to you, do not fall in love with the downside. You can kiss it, you can hug it, you can throw your arm around it, you can date it for a day or two, and then you send it home. Here is why. Unless something goes wrong, does this look like a market that's got a severe breakdown problem taking place? How about to you? You're not even an analyst by any shape, way, or form. You film my videos. Does that look scary to you?
No, it looks like it's going straight up.
Right? It looks like it might have a little pullback, but it should go straight up. Now, it's okay if it has a pullback to these two lines and holds, right? The top of the channel, the bottom of that channel. It doesn't look so scary on the weekly, the NASDAQ. Let me blow it up. I mean, does that look like a market that's having a serious problem? It does not. There's a teeny little gap here. Maybe it's going to go fill it. That coincides with those two lines. Fill the gap, hit the support. I say, yes, you can go down a little, but I don't think that the top is in. I mean, of course, it could come, and we'll call the top if we see it. But from what I'm seeing now, that doesn't look scary. Let me show you more. Another weekly. The emini S&P, does that look scary? How about to you? Does that look scary to you?
Nope.
I don't think so either. Let's just continue looking at these. Look at the Dow Jones Industrial on the weekly. Look at that wonderful channel. Does that look scary? That doesn't look scary to anybody. Nobody could look at that and go, oh my God, that looks so top heavy. Who would say that up here? It just doesn't look that way, right? So don't get your panties in a bunch here, kids. Hang out a few minutes and see what this does before you call the top, okay? Look at the same chart blown up. That is the Dow again. That is a flag that you're seeing up there. It's a bull flag. Do we have room to drop? Yeah, a couple hundred points at the bottom of the bull flag. That does not make a bear market. So whatever is going on out there, so far technically, when you look at the weekly charts, we've done zero damage to our markets. Now, the Dow Jones Transportation Average, deemed the leader of all U.S. indices. Let's not call this dead just yet. What do you think about it? The weekly, doesn't the weekly tell us, yes, you've got some room to move lower, but you really don't have anything that looks really scary here, at least not yet. You made this high, you dropped. You made a newer high from that high. You're pulling back a little. On the weekly, that's not terrible, even if you pulled back to the 200 bar, which is why I have a circle here. Is that our target? Maybe it is. Maybe we drop a couple hundred points. I don't know. But I'm telling you now, for longer term trading, this is not a scary look. And that's why I wanted to show you the weekly charts. And then we go back to the dailies. We get back to sensible trading again. And there is your euro currency. 2 days ago, I showed you that we were getting ready to break out. Well, we sure the heck did. We broke out very nicely, and Omni is looking to buy euro currency once again for trading on Thursday. OMNIX, come on down to livewithoscar.com and meet me in my free live trading room. So, traders, you've seen the technical reasoning behind why I say you start off with the red Omni, but don't fall in love with the downside. Come on now, not yet. This does not look like it's dead just yet. Let's not call it dead just yet as far as I'm concerned. If it calls itself dead, you know us, we're day traders. The Omni will be all over it. The Omni will call its death knell. But I don't think we've seen its death knell yet. Now, whatever's going on with this Trump stuff, I got to tell you, I didn't even bother listening to the news today because I'm just kind of sick and tired of hearing all this craziness. I don't know, did they catch him this time raping male rhinoceroses in Russia? Is that what happened this time? Is he killing baby seals? Is that what he's doing? I don't know. They come up with shit constantly. So I don't pay any mind to it. I don't want it typed in my trading room. I don't care what the politicians are doing. The election is over. This is about the analysis I show you on this whiteboard. This is about the charts that I put up every single day in the videos, in my omnis, and in my chat room. It is not about whether or not Trump is peeing on people or whatever the hell they come up with next. So please, when you come to my chat room, leave the politics at home. This is about trading. Now, traders, thank you so much for answering and leaving all of those comments. I've answered as many as I could. I will answer anything that you send me, and I usually will answer them in the videos, but this video is a little important. I wanted it out very quickly because of the movement that we witnessed on Wednesday. So here it is, traders. You've got my view. Let's see what's going to happen. Don't fall over the downside just yet. Couple of kisses, throw your arm around, you know what I mean? You can tickle it a little bit, but make sure it goes home in a couple of days. All right, traders, see me at livewithoscar.com. Don't trade alone. Come on down to my free live trading room. Just create a username and email address. No credit cards are required. Come hang out with me, and we'll see what happens day by day. That's about it. I will see you then. Remember, keep your emotions out of trading. One of the best things you can do, in my opinion, to help keep those emotions at bay is to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll. livewithoscar.com. I'll see you there. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.